Team, hey everyone. Just got a few people starting to come through now. Welcome to Creators Tech Talk. So we've got a very mixed group tonight. We've got some creators, educators, and educators from other providers. So it is a open public meeting tonight. So as you come in, your mute will be on. So I think just for tonight, just because we do have a number of people, we've got some sort of planned questions that people have submitted. So we'll sort of start through those. But if you do have a question along the way, if you use the Q&A, and the reason why we use the Q&A, it's easy for us afterwards to just download the Q&As and then publish them at a later date, so we can have all the Q&As coming through. So we're 7:27. Welcome everyone. We're just going through admitting as people come in, but there'll be plenty of time to ask questions. If it is a technical question, we may get you to unmute. We're also recording tonight, so we can publish this for those people that cannot make it for tonight. Do you not hear any? And so my name's David Gibson. I'm the CEO of Creators Educational Trust, Creators at Home. Next to me is Jono. Jono, and do you want to introduce yourself, Jono, to the peeps?
Should we just wait 2 minutes?
We'll wait 2 minutes.
Wait,
Just
we're gonna.
I'm
not having much fun.
I do have one request, is that if you are comfortable putting your camera on, it's really helpful to actually see everyone. So again, not if you don't want to, but if you do want to put your camera on, it's actually quite a, we're people, you're people. So if you do want to, that'd be great. You might be in your pajamas. That's all right. No, going to be no judgment here. But it's just nice to be able to know that we're talking to real people. So.
Thank you. And just over to the other side, we do have Nicole here as well.
Kia ora whanau.
So we're 7:29. Everyone can hear us well?
Well, I've got my phone here, they'll message me, but I can't.
Myself and Nicole, we've just got back. We're down in Christchurch for the last couple of days. And we know that there was a few heads down there that couldn't make tonight, but they will definitely be interested in watching the recording after this.
Got home before the earthquake too, which was nice.
Yes. And as we were flying out, it was looking pretty good, wasn't it? It was a beautiful day to fly. And the grounds didn't look too wet. The rivers were up pretty high still, but it was looking pretty good. And I think we had one educator stuck in Christchurch that lived in Methven, and because of the Ashburton Bridge being down, they couldn't get home. So we were being told that it was going to be up to a week before they could get back home, but today they were opening the bridge up to locals for a short period. Then they were going to close it and then assess it and then reopen. I haven't heard actually.
No.
Anyone heard if it was?
I know Sue Duff got home, as all I know.
She got home.
Yeah.
Nice.
Okay, right. We'll hand over to Sonia and Jono. We will be keeping an eye on the
Q&As. So if you've got a
okay.
question, just use the Q&As. And as we move through, people might be putting the kids to bed and everything. So we'll just submit people as they come through. But please do use the Q&A. Lovely. So
Well,
Sonia and Jono.
yeah, well, I guess just my biggest qualification is that I'm a dad. And so for tonight, and I think Sonia's probably biggest qualification is that she is a mum.
Yeah.
So 2 parents, and we're both glad that we're out and our respective spouses or partners are looking after the kids tonight.
Doing the bed run tonight. Yeah.
So it's a good excuse for us
Yeah.
to not have to be at home putting the kids to bed. So appreciate all the work that you guys do on a daily basis. As a parent, so it's great work that what you guys are doing in the early
In their homes,
in their homes. So I really appreciate, just as a starting point, I guess we really appreciate.
He says that, and it's bone and attention. Like I love John. I love working with John, but he's also a trustee of the local kindergarten association. So there's a love-hate relationship.
Yeah.
So we do have a bit of banter about that. So yes, he's a father. Boys, eh?
4 boys.
4 boys.
Yeah.
Yes.
Yeah, 4 boys. So.
And they are typical farm boys.
Yeah, very, very active. So it's it's no rest for me in the weekends, that's for sure.
So we were in the Waikato, and you're a good
Yeah.
Waikato man,
Yeah.
aren't you?
Yeah.
So and your mum and dad have got
a farmers, so that is good. They like the space, they like to get out, but I mean we live in town, but very much.
Yeah. But the farm's also out by Raglan, isn't it?
Yeah.
So it's a beautiful piece of land, beautiful part of the Waikato. If you ever get a chance to come visit us here at Creators HQ, and make sure you put some time to get out to Raglan. So, and Sonia, last time we met, you were pregnant.
No, I just had a baby.
I just had a baby.
Now
That's
I was
right.
saying
Never
no more,
again?
never again.
Yes.
One and done. And
Yes.
now I'm 20 weeks pregnant.
22, yeah. So congratulations. Congratulations. And your sister is
She's-
ECE qualified,
Yeah, and also primary teacher.
primary teacher,
Yeah.
and currently
She-
contemplating home base.
Yeah. Yeah.
So we'll see how that goes. And I think you've had quite a bit of sway and maybe sort of saying, well, actually home base isn't a bad idea,
Yeah,
is it?
yeah.
Good on you. Good on you.
Okay, let's go.
Lovely. I can't find the Q&A, so we might just have to
Chat
use
box.
the chat box. So if you do have a question, use the chat box, and we'll get through. Do you want me to share the screen? And
Yep. So I thought a good starting point would be bringing up this form that you use to complete to do your tax return. And so basically you can choose to use this form, which works out what taxable income you need to include in your income tax return. It's called the standard costing method. So you have an option to use this, or instead work out what your taxable income is based on the actual costs you incur. But this is quite a good option because it saves some of the compliance with having to keep all your receipts and things like that and work out what your actual costs are. So we thought as a starting point we might go through all of these boxes and just show you what things to consider, and as part of that we'll cover off some of the questions that have been submitted as well. So an important thing to note is you can only use this calculation if you're not GST registered. So if you are GST registered, you have to do an actual cost calculation. And not helpfully, this form is unfortunate. It's the 2020 form. We're expecting the 2021 form with the revised rates to come out within the next week or so. We do know the revised rates, so I'll take you through those as we step through the different boxes. So in section A, so this is the gross income section for childcare, you include the total income you receive during the year for childcare services. So you'll put that per month through in the different boxes there. You should also be including income that you might receive from parents for retention. So this might be situations where a child is sick or the parents have taken the child on holiday. That income should also be included in this gross income.
now I think there was a question through that And someone was asking, so Creators pays a resource grant.
We've got that.
So would that resource grant be
Yeah.
included
Yeah.
in this part here?
Yeah.
So the question that was being asked was, is it taxable?
It is taxable and you would include it in this part here. And the deduction section effectively takes into account your spending of that grant.
Yep. So like for April, so it would include any payment from a provider, whether it be Creators or another provider. So we pay MOE funding, a resource grant. So just to make this simple, if it's 20 hours, is it $5? $5. And then depending on what resource grant you're on, quality or standard, it could be 50 up to $1, up to $1.20. So in that instance, they would be putting in $6 plus per hour in there. So they put all the funding that they receive from the provider and parent fees. Wins? Wins. So all income. All income. Okay, cool.
Awesome. I've covered off that. You would also include in there, if you were providing services to essential workers during your lockdown period, that income would also be included in that gross income.
Right. So just to sort of summarize that. So when we went through and we discussed this last year, we continue paying out the MOE funding. We didn't pay the resource grant. We paid a little bit of WINS when it came in and then stopped. And then they were not, so they would put the funds that they receive from us, MOE funding, plus the wage subsidy.
Yeah, the wage subsidy doesn't actually go on this worksheet though. That goes in a separate box in your IR3. So
Right. So this wouldn't actually be put into this box here.
No.
Okay,
not the wage subsidy.
Not the wage subsidy. So in this box here, it would just be the funding that they would have received from us.
Yeah.
Nice.
Another thing just to bear in mind is if you're receiving certain amounts from parents, as an example, for reimbursing trips. So an example might be you take the kids to the zoo for the day and they pay for the admission fee. You wouldn't include that in your income. That's just a reimbursement. So
right. Okay. So that's 100% tax deductible.
Well, that's just not part of the tax return.
It's not considered revenue.
Yeah.
Okay, cool. It's good to know.
Okay, and so once you pop that in, all those numbers in the box, you add them up and that will get you a total at A. And then B, the section B.
Did we want to write in a total there just to
make
it nice and easy? So should we put 10,000?
Yeah.
For the year? Just to make it nice round number. It'll do 10,000.
And then in the box B,
It might be 100,000.
I think it's
I think there's a lot of zeros.
We've had a really good year.
if we scroll up just a little bit, box B is covering hours. So that's covering your child hours per child for the total time, essentially, and then you just add all that up and that gets number B, letter B.
Total B.
Total B. Yeah.
Total B. So should they equal the same or?
No.
No. Okay. So we could put, so we got 100,000 from there and we'll put 50,000. We might as well.
That'll be like the childcare hours. Would you provide 50,000 or 50,000 hours during the year?
50 times 4, you're going to be doing 200
Oh wow.
hours
Okay.
a week by the time you have 4 children for 50 hours.
Yes. Wow.
Actually,
Okay.
yeah.
Good. Okay, and so then you put that number again, that B number, into that box there. Yep. And you multiply that by what the new number is $3.75. So it was $3.70 in the 2020 year, but it's gone up to $3.75.
So $3.75. So Nicole's working that out.
5,000,
50.
50,000. 187,500.
187,500. So 80,750. Yeah.
You.
Okay, and so just as a bit of a background on what that is actually trying to calculate, is it's working out what, it's providing basically an estimate of the cost that you're incurring to have the children in your home. So it's working out the things that are covered in that. It would be the car seats that you might be providing to children, electricity, there's a whole lot of food, wear and tear of your house, laundry costs, first aid costs, educational resources, all those, that's what this numbers effectively take.
So if we were doing a normal set of accounts, profit and loss, it would be all your expenses. So that would be your total expenses for the year.
So paper towels, granola, all of those things.
All of those.
Sunscreen.
Yeah.
Not the wine though.
Not wine.
No.
What a shame.
Also, whether or not you could claim for your hours, the time in the COVID period will essentially come down to whether you were receiving any income during that period. So if you were an essential worker, you'd be claiming the childcare hours that you actually provided. In some instances, if a parent was providing you with an amount to retain you and retain your services, you could also claim the expenses related as if the child was in your home for that period of time, just the ones that are in this variable standard cost box. But if you were closed down and you didn't receive any income from parents during that time, then that you wouldn't be claiming for the children during that period.
So we did have some educators that were working as essential care. So they were open, and then a lot of them were in level 3.
And then the rest in level 2.
Yeah.
So in most instances, it would just be based on your actual child hours.
Yeah.
And your provider would be able to send that out to
They'll send
you
it out
with
to you,
their end of
yeah.
years. Yep, cool.
Okay, and if we now move on to the administrative cost part, that rebate has gone up to $367 a year. And basically you divide the $367 by 52, and then you multiply it by the number of weeks you provided childcare services during the year. And
So shall we, be open 35, 39 weeks, do you think? 4 weeks holidays, some will take holidays, stat days,
So 45 weeks.
45 weeks? Okay.
there you go, 367 divided by 52
52.
times 45. So that's $318, we'll round it up.
218. There you go.
Okay.
So if you were closed down during the COVID lockdown, you just wouldn't be including those weeks in there, or if any weeks that you're on holiday or things like that.
Okay.
Awesome. Now the next one is section covers off accommodation.
Which is the purchase price of your
Yeah,
home,
so this section is when you own your own home, and that's the home that you're providing your childcare services out of. So in there you'd put your purchase price of your home. Now that's the cost that you bought your home for, but it also includes if you've done any improvements to your house since you've owned it. So anything that would add value to your home, then you can also include that in the purchase price. It's important that you keep records of those kind of amounts that you're spending to be able to support that amount.
Just being aware that just because house prices have gone up generally across the board, you wouldn't add your own estimated value of your house right now. It's just based on the purchase price alone.
Okay, what part of the country are we living? Are we living in Auckland? Would that be $1 million or
Easily.
or yeah, 1.2, or should we go? What's the average house price currently?
And
650
in the country.
in the country.
Isn't it higher than
750.
that? I thought it was
Yeah, I
like
thought it was
800.
high, yeah.
Okay,
I think
all right.
it's-
So we're just going to go
800,000.
average. So we're going to say 800,000 for our house. So that's what we've purchased it for.
Yep.
And then so
You multiply 800,000 times 0.04.
800,000 times 0.04. That 0.04 like that, yeah.
It's
32,000.
32,000. So 32,000 goes in that next box.
now, what about capital gains? So, like, what if I bought my house
No.
10 years ago
No.
No,
for
unfortunately.
250, and now it's worth 800,000?
Unfortunately, that because you only paid 250 for your house, it's
Yeah.
only the 250 unless you've
Done some
done
improvements.
Yeah.
Yeah.
Renovations, put in an extra room.
It's $100,000 sandpit. Doesn't
Yes.
doesn't cut it.
So then you take off any amounts you might have received from WINS for an accommodation supplement. So that gets minus off that
Okay.
total.
Does working for families come in anywhere along the way here?
No, that
Oh,
comes into
interesting.
your IR3.
Ah,
Yeah.
okay, right.
Then you multiply that total by 0.5, and then you multiply that total by 0.3333.
Shows I missed that bit.
Yeah,
Okay.
we're going to assume for the purposes of this that the person hasn't received
Oh,
one.
okay.
Let's do
Okay.
nil in that box.
Yeah.
So if we go 32,000 multiplied by 0.5,
So this one here, the question,
I wonder if we do
my
the
question
questions-
with this was if receiving wins. So just Adrian, can you just clarify, were you receiving wins personally or receiving childcare wins? So it's
Yeah,
like
I think
parents
it-
and wins.
yeah.
I'm reading it as parent wins, but I
am
just want to
Just
clarify.
clarify that.
As
first,
an
Adrian.
educator, the wins continued. Okay, cool.
Okay.
So because wins was paid
As an
for
educator.
for a little bit,
Mm.
and then
For
it
a wee
stopped.
while and then it stopped. Took a wee while to come back at the end.
Yeah, then the 20 hours continued as the funding
Yeah.
continued to be paid. Yeah,
Yeah.
yeah. So that wins would come up here and form part of your income up here.
Yeah.
So
What she's-
so gross income up here is MOE funding that you receive from the provider.
That's not what, that's, yeah, but what
No?
her actual question is what she's saying is, if she received the 20 hours for the entire 52 weeks, does she claim the 52 weeks as working?
So
Oh, right.
you wouldn't claim that if you weren't having children, didn't have any children in your home at that point in time. Is that what she had?
Yeah, I think what Adrian's saying is that, so we continue to pay the 20 hours through the whole way through COVID. So whilst in essence she was at home and lockdown technically closed, living off her wage subsidy, we continued to hand through wins in 20 hours.
Yeah.
So does that mean that she
So-
worked for 52 weeks? That's your question.
So what you would do is you'd be claiming as if the children were in your home for the 20 hours in that variable standard cost box, but you wouldn't be claiming for 52 weeks for the accommodation component. I hope that makes sense.
She's pretty, I'm sure yeah. You can contact us directly, Adrian, if that doesn't quite make sense to you. She's one of the Ed's and same does quite a few of the skills tax for them. Oh, that's perfect. That's what I've done. She's perfect.
Yep.
That's what she's done anyway. She just wanted to double check. That's awesome.
Awesome. Then I think we can, so essentially then you'd get a total in the box and then you divide that by 52 weeks and multiply it by the number of weeks that you provided childcare from your home.
So it's 45 weeks. So what have we decided?
So that we did have some questions around someone who had sold their house during the time period and then moved to a rental property. So what you do then is in this accommodation, your own home section, you'd just be including the weeks that you owned your home in that income year and provided childcare services from it. And then you'd also have to complete the rental home accommodation section for the period that you rented. For that period.
So up here where we've gone 45 or, so we've been open here. So does that, so you would go instead of saying 45, for example, you own your own home for 40 weeks. So you would reduce that down to 40 and then down here, you'd put 5 weeks. 5 weeks,
Yeah.
okay.
So it could get pretty complicated in situations if you actually sold a house and then bought another home. So in that situation, you could either do an average purchase price of the two properties or essentially run the calculation twice for the number of weeks that you own. So that could get a little bit more tricky.
Yeah, I know the girl that asked the question only rented for a week in the last financial year and owned for the rest of the year. So yeah.
So in that instance, so if it was 45 weeks, she would go 44 only for her own home in 1 week of renting. Okay, that'll answer your question nicely.
Yeah, I'm sure.
I think,
Yeah.
Okay, and then if we just move on to the next box, which is additional costs. So this is what this box is trying to cover is anything that wouldn't be covered in the standard cost or variable cost claim that you've claimed earlier in the form. So the examples they give is annual, well, however often you need to do first aid training, you might have to pay for that. That's a one-off expense. And ACC levies.
Oh, yeah, that's a good example. Yeah.
But certain things, we've had a lot of questions around car seats. Car seats are already factored in the earlier deduction, so you wouldn't claim them. Yeah.
Right.
Yeah.
Cool. So we're gonna go through this. So 100,000. We're very good educators. Less variable costs.
I don't think we've completed all.
Oh, now we've got 1 million.
we're
Oh, we
gonna
haven't?
go-
Okay,
yeah,
so we're not gonna be able to do
upside down
this.
and back to front
Okay,
if we try and do this.
Yeah.
all right.
So basically, all the previous boxes you've completed in the worksheet, if you then pop them in here and it will get a taxable income value, and that's the value that you're putting in your IR3. And there's a certain box that you put that in, and box 24 of your IR3 called self-employed income. Now, the interesting thing is if your expenses actually exceed your gross income for the year, you don't put anything in your IR3 in that box. You're not allowed to claim a loss.
Right.
Against your other income. So in some instances, if you're not receiving any other income, you wouldn't need to complete a tax return at all if your expenses exceeded your income, essentially. Then payments you might have received from the wage subsidy. There's a separate box now in the IR3 for that in your tax return. It's box 26. And the amount that you're returning there will really depend on when you received the wage subsidy and how you treated it in the 2020 year. So an example might be that you might have received a lump sum in March 2020 and you've only, on the basis that it only covered 2 weeks, was to cover 2 weeks of your income, you might have only included 2 weeks in your 2020 tax return. So all the remaining amount needs to go on your 2021 tax return.
Lovely.
And someone had a question around the resurgence support payment.
Yeah. That would be Auckland in particular. Yeah.
That payment isn't subject to income tax, so that shouldn't be in your income tax return. But if you are GST registered, you should have returned a GST output adjustment on that payment. So that's basically stepped everything through. So if anyone has any questions for us from that, please type them in the chat box.
I'll talk a little bit to the my IR, so your online So in terms, obviously, we went through that form, which is I call it paper-based, but it's actually electronic. Now, that is a work paper, and so you need to keep that, fill it in. From a record keeping perspective, you do want to keep your evidence of how those numbers are generated. Technically, you actually keep your records for 7 years. So the idea, if they were to audit you, can go back to 7 years. It doesn't mean you have to keep a paper copy. You can save it down to somewhere. You can email it to yourself and it's an electronic copy. But just from a reference point, if you ever ask a question, they just need to have some evidence about how you got those numbers. So from a week's perspective, so it's useful to keep those records of how you've made those calculations. The other thing is, look, IRD is really, really good in terms now of the online capacity. So if you haven't already, it is, and I don't know who's filing your tax return. If you're doing it yourself, you really want to make sure you get your My IR login. So that's it goes online. It has all your information and terms and tell you how to file. It pre-populates a lot of the income that you get. So, for example, if you have a KiwiSaver, it'll pre-populate any of that income. If you have a POAE income from another source, so it pre-populates a lot of the information. It also prompts you a lot of the questions in relation to other income. So, might be if you have rental, maybe a rental property, maybe you have some other self-employed income, maybe you have some POAE, those sort of things. It helps you work that out. And I guess the other thing is, I think, Nicole, you mentioned before around working for families. So how that works is basically when you're a self-employed, you can either provide the ID, sort of let them know this is kind of where we think our overall taxable income is. Now, bearing in mind, when we say taxable income, it's not just the earnings, it's the net profit or the profit number that's the important number. So from your childcare, it's not what the number they're interested in terms of calculating what you qualify for, is not how much you've earned in terms of the income you received. It's earnings less the costs that gives you, and that's how they base your working for families. So you can either do it in a couple of ways. You can either kind of guesstimate where you're going to land, and then request to have that kind of paid on an ongoing basis, or you can.
So does that just make cash flow easier? So you could sort of say, well, it's going to be around about.
Yeah,
if you sort of say, okay, I can budget $250 a month or something. Just plucking a figure out of. So that way it would make it a lot easier to budget instead of trying to save and then make a big lump sum.
Yeah, so if you receive it on an ongoing basis, what I would suggest is underestimating a little bit of what your income is, because what I've seen in the past is sometimes people say they're going to earn, let's call it $50,000, and they get paid out the whole year at that basis, and then it comes to the end of the year and they actually earn 65, they actually have to pay it back. So you just got to be careful. All the alternative is depending on how you can afford it. Look, it's not necessarily not always the easiest way. Is you can get it paid in a lump sum once you file your tax return.
Right, gotcha.
So either you make a guesstimate of what you're going to earn, and they'll pay it on a regular basis, and the IRD will do a wash up, but that wash up could mean that you pay it back if you overestimate your income. So the key here is, from your own personal cash flow, if you need that weekly basis, I'd just be a little bit conservative on your income, because what you don't want to do is at the end of it, when the wash up, you end up having to pay it back.
Go low.
Yeah. So that's probably, and even like with your taxes, you obviously with self-employed, you often become provisional taxpayers. So again, just making sure that, but you can see this information on your My IR. So when you go on, that they'll kind of tell you kind of what payments are coming up. So, and in all honesty, they're actually pretty good in terms of corresponding. The idea of have a kind of a policy, or they do have a philosophy, I guess, how well it works in practice, but they have the idea of trying to be helpful for people that are trying to do the right thing. So they're not going to, they do have an idea, they're going to try and help you get to the right answer if you have questions. So don't be afraid to call. if, I mean, that will come down like a police where people are trying to be dodgy, but if you're trying to do the right thing, we've found the ID to be pretty receptive and helpful. So do reach out.
So what you're saying, don't be afraid of them.
Yeah, exactly. So,
Yeah.
and look, if they're being tough, they should, in my experience, and is that they will be quite accommodating if you're trying to do the right thing.
Cool.
Yeah. So
It looks like we just
Yeah,
had
we've got a
some
couple of
questions.
questions there.
Yeah.
okay.
One's popped up. on the screen.
So someone asked about they receive paid parental leave. So that should be
Yeah.
included in your income tax return. So in your your IR3, and that information will be in my IR. You would have already paid tax on that, so there'll be also a credit in one of the boxes in the IR3 to take off the tax you've already paid.
Yeah, and so that will automatically come through. The ID has a record of that, so that will automatically be included in your tax return.
Someone wants to, got a question about the worksheet.
Worksheet, so do we need to go back?
Oh, please clarify.
That's fine. We can I think we'll be fine to clarify. So I think the note 2. So essentially, what that applies for your accommodation in your own home, and in the rental if you're renting a home. And essentially, what that note 2 is saying is that when you get through these calculations, total weeks amount, you need to divide that by 52 and then multiply it by the number of weeks that you provided childcare from that home.
Right.
Yeah.
So if you worked for 48 weeks, it's 48 weeks.
Yeah, so you
Yeah.
divide it by 52 and multiply it by 48.
Give us a thumbs up, Debbie, if you're happy with that. And then the question for you, Jono. What's the PIE income box mean on the tax
Yeah.
return? Yeah.
I'll let you take that one if you want.
Oh, what?
It's a blueberry or mince and cheese. No, sorry.
By income, it tends to be
Good joke.
income you might derive from your KiwiSaver and
Yeah.
things like
Yeah.
that. And essentially, it's income that's been tax paid already. So you'd include in that any it should all actually be automatically calculated
yeah.
in my IR, and they'll also have information of what tax has been paid.
One of the things that probably, if you have a KiwiSaver, they'll ask for your prescribed investor rate. And from memory, you have 3 options. I think there's 28%, maybe 17.5%, maybe 10.5%. But what that means is it depends on where you think your year-end earnings will be. And so if you choose 28%, actually that's a top tax bracket, and you don't actually even have to declare, you don't even have to include that as income because you're basically paid tax at the top rate. If you think your earnings are going to be less, you can actually choose a lower prescribed rate. If you choose a lower prescribed rate and your earnings equal more, you actually have to include that income into your tax return. So I guess it's probably it's one of those things that I think you've got to, again, guesstimate. It's taxed at source, so make your best guesstimate. A lot of the kind of KiwiSaver providers should give you like, this is the earnings range, and this is what sort of prescribed investor rate you should use. So and look, you could also Google what prescribed investor rate should I use, and then probably be a pretty easily, hopefully, non-tax lingo to tell you which rate to use.
It looks like there's also been a query on
What is provisional tax?
Yeah, you opened yourself up to that one.
Yeah, so if you're earning income, because I can't remember, did you deduct withholding tax? No, for the income? No.
I'd say no.
Yeah, so if you earn over a certain, as a self-employed person, so there's a difference between, if you're a POE salary, obviously your employer takes care of your tax. When you're self-employed, you take care of your tax. So with your earnings, if you get over a certain amount, then the IRD says actually, rather than paying your tax in one lump sum at the end of the year, you have to now pay it in installments during the year. And generally speaking, you're talking a March balance date. which is most of you. So that would be, you'd normally they try and guesstimate how much earnings you're going to make for the year, and then you pay in 3 installments to try and, so that the IRD thinks you're kind of square by the end of the financial year. They still do a top up. If you overpay your tax, you get it back. If you underpay your tax, but the idea is that you pay it in installments, so you don't pay a big lump sum at the end of the year. Now, you're probably going to ask me what that threshold is, and I'm thinking back about 5 years, and I know what it is, but they've just changed the rules, so I can't remember off the top of my head what that threshold is, but it's gone up quite a lot. So, but you will get notified from the ID if you're a provisional taxpayer, and they'll say you need to make a payment on either the 28th of August, 15th of Jan, and
I like it.
yeah.
Great question.
So,
Okay, so the 2021 variable standard cost rate, it's gone up to $3.75. And
That's
the
5 cents from last year.
and the admin rebate rates has gone up to 367.
That's up from 361.
Yeah.
Yeah, so not much, but still a little
Yeah.
up. Yeah.
Lovely. Oh, well, thank you very much. Hopefully that helps you
Any more questions
be
before we
able
sign
to
off? Yeah.
get through and make those tax returns out there. When did you think the
About 10 days. you thought?
about another 10 days, and the 2021 tax return should be submitted up on the website? So that's probably if you haven't logged onto my IRD, recommend do that over the next 10 days, and then you'd be able to submit it online.
yeah, and then once you've submitted it, that's when the IRD will do the calculation for working for families. So they don't do that final wash up until they've got the information. The same will be for if you have, say, a donation rebate. They will, if you've done a donation, if donations during the year, you won't get that until you've filed your IR3. So yeah, and also ACC is calculated based on the IR3 filing as well. So IRD automatically shares that information with the ACC. So when you file your tax return, the ACC takes that information, works out what that is. You just want to check when they come through your ACC bill that it actually is, they give you what they call a business industry code.
Yeah, yeah.
And what you want to do there is you want to make sure that you're not like a freezing worker or a professional rugby player
Or a logger.
or a lumberjack.
Forestry,
Yeah, because they have a very high rate. So you just got to make sure you're in the right industry profile.
Cool. So look, if you go away and you get stuck filling out your tax return, look, don't stress about it. Send us an email. Either get in touch with your visiting teacher, email it to them, or if you're not part of Creators, just send it to info@creators.org.nz. We'll send it to the guys at Deloitte's, pretty accommodating, and we'll flick that back. So don't stress. I think one thing we were talking about maybe going forward next year is working out a worksheet to sort of work that out. So
Yes.
same for Andrew.
Yeah.
Jono's got a guy that works for him called Andrew.
Yeah.
He's part of our family here at Creators as well. His daughters go to our Waipa Centre actually. So lovely guy, but he is an Excel spreadsheet king. So we might have that up and running for you next year.
Yeah, that would be a good plan actually.
Lovely. Thanks for your time tonight. Hopefully you found it interesting. Stay safe, stay warm. For those guys in Christchurch, it was 1 degree when we got up this morning. Nice and brisk, but a beautiful morning. Long weekend coming up. Stay safe. Thank you, Jono. Thank you. Sonia, sorry. Lovely guys. Thank you so much. See you later.
See ya.
Yeah.
See you.